Hi everyone, this is Paul Stewart here from Segmented Solutions again. I'm often asked about the unit trust and how it can interact with buying and selling property that you already own. So I thought I'd put together a little technical video for buying and selling projects using the genuinely diverse Exempt Unit Trust. Basically, there are certain rules about buying and selling existing property. What I want to do here is to give a detailed review for property investors who are thinking about integrating a tax-exempt structure like a genuinely diverse exempt unit trust into what they've already got. So here's the starting point. A quick reminder. You'll have an existing property company which is fully taxable. Everything that you get by way of rent or profits that you get from redeveloping and selling property will all be subject to 25% corporate tax. And you'll have your unit trust company, which is tax exempt because it's plugged into your pension. So we've got a taxable side and a tax exempt side. So let's look at a scenario here. What we've got on the left-hand side is an existing property company with a £500,000 property, which was purchased by the company. It involved some finance. It also involved £100,000 of director's loan capital going into the company. And on the other side, we have the unit trust company, which contains £400,000 of pension funds that have been moved into the nominee company. So what we're going to do is we're going to sell the £500,000 property from the existing property company into the tax-exempt company. And that will move the £400,000 of cash across into the existing property company and move the property itself across into the tax-exempt company. Sadly, although you're in charge of both companies, there will be stamp duty payable because it's going from a taxable environment into a tax-exempt environment. So you can't use any of the group reliefs that may be available if you've got connected companies. It will also be a disposal for capital gains tax purposes. So your existing UK property company will be making a disposal for tax purposes. And if it's a newly incorporated portfolio, then moving the property at today's value will be no issue because on incorporation, everything is rebased to today's value. If it's a recently purchased project, and then again, it probably wouldn't have moved up in value. So again, there's no issues there. But if it's a property that you've held for a long time, then you might not want to do this. You might want to reconsider because of the tax payable. And the balance, the additional £100,000 to complete on the purchase, can actually remain outstanding as a loan. So your unit trust company, although it owns the property outright and will be receiving all of the rent tax-free, it will still owe £100,000 to the property company. And of course, that can be repaid from rent if it's a straightforward sale of a property, and then you put tenants in and there's rent coming in and that's all you're doing. So we now have a taxable company, which is sitting on some cash. It's also owed some money from the tax-exempt company. So let's have a look at what happens next. Let's imagine you're doing a development. You've got an existing property company. It's got £400,000 of cash in the bank. And the exempt unit trust owes it £100,000, and the exempt unit trust contains the £500,000 property. Now that the existing property company contains all the cash that originated in the pension scheme, it can now pay for architects, developers, it can pay for plumbers and carpenters and all the usual tradesmen in order to look at that property and do all the works. And it'll obviously invoice the unit trust company for all of the works that's being done, but it's got the cash to actually pay and bankroll the works, which is a good thing. Now, the property might become worth £1.5 million because it started out at £500,000, it's had £400,000 spent on it, and it becomes a much more valuable property. However, because the value has gone up inside the unit trust company, there's no UK tax to pay, even if it were to be sold right now. But let's imagine that it wasn't sold. We've got the situation where the exempt unit trust company pays for the works gradually. So as the rent comes in, it's paying for the works. However, one thing we must bear in mind is that the company can refinance at any time, and it can refinance to settle the debt that's owed. Because remember we said that there's a director's loan. Well, if we look at this scenario, the rent that comes into the unit trust company free from corporate tax. It gets paid across to the UK property company that you started with. Again, it's a capital thing. It's repaying money owed, so there's no tax to pay. So the director can draw down the rent to repay their 100,000. Now, normally you'd have to have £133,333.33 worth of rent in order to repay the director's loan of 100,000, because the rent would suffer tax. But in this situation, we've got the tax-free rent being used to make payments to repay the director's loan. So we've got no UK tax to pay on this scenario, and even if the property were sold for £1.5 million, the gain that's being made on that property falls into the unit trust company, and there'll be no tax to pay. So you're UK domiciled, UK resident, and you've developed a property, and you've got no tax to pay, which is a great situation. This is, like I say, relatively quick walkthrough of a case study that I've been looking at, and I thought it would be useful for you to have. However, every situation is different, and you can see bits of this may fit with your circumstances, bits of it may not, and that's why the most important thing is to sit down and talk to someone like myself. And here are my details from Segmented Solutions. The direct dial number comes straight through to me, my email address. I've also got a digital business card, and at the bottom there, if you would like to set up a SSAS pension in the UK, and there's a link there with all of the documents and a video explaining how to do that. I hope this last video in this series is of some benefit and some use to you, and I look forward to speaking with you soon. Thank you very much.